Hello, it's Bini here. Thanks for joining my streaming. How are you? Nice to see all of you again. I can see Ray is up there. Hi, Ray. All right, let's get started for today's streaming. Just as a background, why I wanted to talk about yield curve steepening. That's because during the last Saturday SGX, seminar, I mentioned a little bit about this yield curve steepening, but there wasn't much time. I don't think that there was a lot of questions around this, and I thought that is something that's important. All right. Therefore, today I decided to just talk about it, to discuss a little bit more. Okay, and of course that the next part of this streaming in terms of content is I wanted to talk about the new launched program, which is the R program. All right. Our program means the Alien Hand-Holding Program. All right. Please don't go yet because I'm not really like selling anything, but I thought that is a very good deal because the R program has the full course fee fully refunded as well as the loss cover. There are a lot of questions and the take-up rate has been really very nice, encouraging. A lot of people signed for that and we traded live. So I thought that, I just want to talk about it. All right. Because tomorrow is the last day of one of the promotion. Okay. Tomorrow is the last day of one of the promotion. And therefore, don't waste it in case that it's not going to be renewed anymore. All right. So let's continue. Same thing. All right. Disclaimer. Today is purely educational. All right. Just my views. Okay. Just because I use the template, I think that a lot of you guys are familiar with me. I'm not going to introduce myself, but anyway, so just have a read on my profile. I'm training as well as trading, but one of my other main job is system design. Okay, that means that I design trading system, program quite a couple of the trading systems for a lot of people. Okay, so let's get started. Just a little bit about the profile. That means that because later on I want to talk about the our program, which is Top Blast and the R. All right. Just to let you know that at about 9 o'clock right now, we if there's a trade signal, we should be getting ready to put in a trade. If not, then about 10 plus 11, I will be actually sleeping already. All right, but usually now I step a little bit later because my son can't finish his homework, and it's usually about 12 that I get to sleep. Okay, but I'm a like 4-hour trader. Every 4 hours, if there's a trade, I just put in the trade. All right, let's talk about the yield curve. Okay, and that's the objective of today. I know that there's a lot of discussion, a lot of things about whether Fed would cut rate or whether Fed will continue to do a rate hike. Right. What I like to do is I like to offer a little bit more, less on opinion, but more on data. Okay, so that's always what I've been doing. All right, more on data to support what it's potentially showing right now. Okay, so let's talk about yield curve. Okay, so yield is like the interest that you receive when you buy a bonds. Okay, it's the same thing as the interest that you receive when you put your money in the bank for the fixed deposit. Now, if you take a look at my chart, it says that the short end of the yield curve, based on the short-term interest rate, is determined by the expectation for the Fed policy. Now, meaning that we have long-term bonds, all right, long-dated bonds, like 10, 20, 30 years. We have short-dated bonds, like, for example, a few months to maybe like 1, 2 years or 3 years, right? So this would be the short end of the products, which is the bond products. All right. Now, for the short end of the yield curve, that means the yield of the shorter bonds, shorter period bonds. All right. They fluctuate mainly because of Fed expectations. Okay. For example, if you think that the Fed is expected to raise rate, all right, then the short-term yield would go up. If you expect that Fed is going to cut, the short-term yield would go down. Okay. Whereas the long end of the yield curve, that means anything that's about 10, 20, 30 years, has to do with the outlook, especially what is the outlook of the economy, what is the outlook of, for example, the demand and supply, and they are mainly, all right, bought by huge investors, pension funds, institutional investors. All right. Now, if this is the case, different people, different group of people, based on their objective, would buy different type of bonds. Okay. Now, in a normalized environment, okay, where the normal shape of the yield curve, it should be sloping up. That means that the short-term yield would have a for the short-term bonds, right? The yield of the short-term bonds would be lesser than the yield of a long-term bonds. If you take a look at the left side here, right, the 1 month or 3 month or 1 year, right, in a normalized situation, it should continue to move up, right, towards a longer dated bond, where longer dated bond should have a higher yield. Okay, it's the same thing as, for example, if you put your fixed deposit, if you put, like, let's say a 1 month versus a 24 months, all right, then the 24 months would get you a higher interest. Okay, so the left-hand side, right, will be a normalized yield curve. Okay, however, when you have an inverted yield curve, it means that a behavior of what is happening right now and behavior of the right-hand side. Okay, the right-hand side shows that, for example, the shorter term bonds, the shorter term treasury bonds are giving a higher yield, all right, versus the longer dated treasury bonds. Okay, so we have an inverted situation in terms of the yield curve. Now, why is it that the yield curve inverts? Now, there are two interactions here. Number one is that because Fed has been rising rate, therefore the short-term yield goes up in anticipation of Fed actually hiking rate. Now, the second reason of why the longer dated bonds, that means 10, 20, 30 years, right, they are having a lesser yield, is because there is actually a higher demand from it. Okay, why do I say that? Now, if you take a look at this place here, right, where I've drawn in a seesaw between a yield and a price, right? The yield and the price of the bond has this inverse relationship. For example, if the price of the bond goes up, more people buys it, therefore it goes up, right? Then the yield of that bond would drop. Now, therefore, when we take a look at the 10-year, 20, and 30-year bond, why is it that the yield right now is lesser, okay, than the the shorter term bond, right? Now, that's because a lot of people are actually buying it. Therefore, price went up, okay, and then the yield is dropping right now. Okay, now why is it that many people are buying the longer dated yield? And that's another story. Okay, and that's because, for example, they might be looking at the future and they are not too positive about the future. So that's caused that yield curve to invert. And that was basically the story last year between November and December, where the yield curve inverted. Okay, now, what are we seeing right now? Okay, what are we seeing right now? Now, we have a little bit of a different story since after SVB, Signature Bank, or even Credit Suisse, right, starts to show problems. Okay, all right. The market sort of realized that the very aggressive rate hike of the Fed might be causing some problem. Okay, to where? To the banks, or even there are talks about, it might be causing problem to the commercial REITs, okay, in the US, right? Now, what we are seeing right now is we are seeing a steepening of the yield curve. Okay, now let's talk about the yield curve steepening. There are two types. One would be the bear steepening. The other one would be the bull steepening. Okay, now the bear steepener, all right, to the left-hand side, shows that, for example, the short term, that means the long term and the short term rates are coming closer together. Okay, so that's called steepening. When you have the bear steepening, it means that the long term rates rise up faster, all right, more than the short-term rates. Okay, now versus the bull steepener, which is on the right-hand side. Okay, it means that the short-term rates fall faster than the long-term rates. Now, both situation, whether it's the bear or the bull, leads to that the rates between the long term and the short term coming closer together. It's just about who is the driver, which one is the driver. When you have the bull steepener, it means that the short term rate is falling faster than the long term rate. So therefore, it's the short term rates that is moving faster towards the long term rates that cause these two rates to convert. Now, we are seeing right now a bull steepener. That means that we are seeing that the short-term rates after Credit Suisse, after SVB, all right, falling faster. For example, we have the 2-year yield, okay, for the Treasury bonds. The 2-year yield, right, was above 4. And then shortly after SVB, right, it fell to below 4. Okay, right now it's stabilizing, but you can see a steep fall in the 2-year yield. Okay, now let's take a look at the implication, right, of, for example, why we want to take note of the steepening of the yield curve. Now, I said before, all right, that when we have a yield curve inversion, let's take a look at the 10-year and the 2-year, right, at the green arrows here. When we have the yield curve inversion, it's in the past, it suggested that potentially two things can happen. Number one, that with the yield curve inversion, this is the peak of the Fed rate. So that's number one. Number two, subsequently after that, you will see this grayish bar, vertical bar, and that shows a period of recession for the US economy. Okay, so two things happen. One, a peak of the Fed rate, and then a recession happening. All right. Now, however, for the yield curve inversion, usually precede the rate cut by 1 to 2 years. That means that once we see that yield curve being inverted, it doesn't happen immediately for the rate cut to happen. The average noted period was 1 to 2 years. Okay. However, when we take a look at the steepening of the curve, all right, where, for example, I mentioned already, right now, we have the bull steepener, which is the short-term yield starts to fall towards the long-term yield. All right, then this becomes a more accurate prediction of a rate cut. Okay, as short as 6 months, 3 to 6 months, once we observed a steepening of the yield curve, all right, historically, we've seen a rate cut. Okay, therefore, if you take a look at the right-hand side of this yield curve, right, where I plotted the 2 years and the 10 years, right, the difference between the 2 years and the 10 years, we saw that shortly after what happened to SVB and, US banks and Credit Suisse, right, we saw this very steep upward movement. Okay, so this suggests that, potentially the market is expecting that Fed to cut rate. Okay, and it could also mean that these might cause a foreign banks, right, to stop buying the long-term treasuries. But more important, because of that expectation that Fed might be cutting rate, they are actually this expectation might cause that yield to decrease. Okay, for the short-term yield to decrease, right? Because I mentioned before, short-term rate is very sensitive to what the Fed is actually doing. All right, now let's take a look at the chart here. So let me just show you the chart. Just wanted to share with you on the screen, all right, this particular chart here, where I've plotted basically the 10-year versus the 2-year. Okay, I just wanted to show you the correlation between the 10-year yield and the 2-year yield. All right, so this is a historical chart, and I'm showing right now at the weekly time frame. At the bottom here, all right, is a graph on S&P 500. So at the bottom is SPX, which is the one on orange. All right, on top here would be a 10-year and a 2-year difference, which is the yield curve. All right. Now, anything that is less than 0, which is below the black line, all right, shows you that the U curve between the 10 and 2 has inverted. Okay, so let me just draw that for you. Now, this one here, which is around here, all right, this place, it shows that the 10 and the 2 has inverted. So this place, okay, 10 and 2 has inverted, all right. Now, right now, what we are seeing that the 10 and 2 had inverted again. Okay, but I want to bring up one thing, right? Do you find this sharp move up? Okay, now this is what I mean by a steepening of the U curve. Now, what I'm more interested to show, right, is the correlation between whenever there's a steepening in the U curve. Oh, I just accidentally removed this one here. Let me just put that big again, in again. Now, what I wanted to show, right, is that between that steepening of the U curve and the behavior of the S&P 500. All right. So let's take a look into the first example here. That happens during 07, all right, and 08, where we had also the U curve inverted, and then after a while, it starts to go inside this positive territory. Okay, that means that when the U curve invert, right, the market was expecting, hey, look, recession might be coming. Then people, the large investors or pension funds, they're buying a lot into the longer dated bonds, right? That caused that U curve to invert because they buy a lot in the longer dated bonds. All right, the price went up. The longer dated bonds yield actually dropped. Okay, so that's caused one of the inversion to happen. But I wanted to bring up, right, is that whenever you see this U curve steepening, all right, that means once you see this a bit of a steep up move, okay, a bit of a steep up move, right? I'm talking about that very steep up move after it went to below 0. Okay, that means immediately after it moved up to above 0, that very steep up move. Okay, now after this happened, it led to a flattening of the market. That means the price actually flattened a little bit, and then it led to that decline. All right, that means that in a way, if you look at what happened in 08, there was a crisis, right? Because we had the US financial crisis. It started with the subprime. That means it started with the consumer housing, all right, followed by the collapse of Lehman Brothers. Okay, but before that, right, the bond market were giving us a little bit of a clue, all right, with a U curve inversion followed by a steepening in terms of that U. Okay, now let's take a look at another example here. Right, that was again happening between that 2000 period. 2000 period, we had the .com, the bubble burst, right? Same thing. The U curve went inverted. That means went below 0 for the 10 and 2. All right. Then observe this part where it started to get aggressively in terms of the steepening process. That means it just goes straight up, okay, hover for a while, and then it went to the positive territory and went straight up. And that's where we have the U curve steepening. And what happened after that, right? There was actually a crash. Okay, that means it doesn't happen immediately, but the market went into a toppish situation and then went back down. All right. Okay, let's take a look at one more example. Okay, where we had that let me just head around this area here. This place here, let me just draw that. Okay, all right. So we had another situation here, right, where there was a U curve inversion, and then we had various, steepening process. Okay, but that didn't lead to a crash as what we saw. Okay, but yeah, if you look a little bit more later, I will show you the 10-year and the 3 months. Right, that becomes very obvious. Right? You see this steepening happening again here. And it did had a bit of a market correction. It wasn't significant because at that point of time, S&P 500, the base was really very low. Okay, so it was a drop, but it's not that obvious in terms of the chart if you compare to now. Okay. Now, just based on these 3 occasions where we have the U curve inversion followed by a steepening, all right, historically, based on these 3 observations, it followed with a crash in the stock market. Okay, now let's take a look at another one more chart. Okay, let me just remove this one and then move on to the 10-year and the 3 months. You should be looking at my chart here that shows 10 years and 3 months, all right? So what I did is to put in the bond yield of 10-year versus 3 months, and then below shows you again S&P 500. All right, now I believe that the 10-year and the 3 months is a better prediction, all right, of the stock market in terms of turning points. And I personally prefer to use the 10-year and the 3 months, okay? Meaning that these are very extreme long-term and extreme short-term bond yield. Okay, now the 10-year and the 3 months starts to have that inversion around last year, October to November period. Okay, so let me just show it to you, right? So that was the November-October period. And we also saw that the US index and also Hang Seng and Singapore went up, right? But let's talk about whether there's any steepening in that yield curve, okay? Based on 10-year and 3 months, the answer is no. We are not seeing that type of a huge steepening type of a movement here. That means we don't see this huge up, all right, that goes straight vertically up. Okay, not yet in the 10-year and the 3 months yield curve. Okay, but if you look at it historically, okay, let's take a look at it historically, right? This period here was 2020. That was during the COVID period. Now, for the COVID period, the yield curve for 10 and 3, it went into that inversion. Okay, that means that it inverted. That means it went in inversion. It probably caused a little bit of a hoo-ha at the point of time. All right, and then we saw that steepening going on. That means, you know, that yield curve, the 3 moving very near to the 10 yield curve like this, steepening that, and then somewhere around here it went like vertical up, right? And the market was talking about potentially that could be a crash, that could be a crash at a point of time, but it just didn't happen. And then COVID came, right? And it did move down, okay? But that wasn't a financial event, okay? But let's take a look at what happened during the period of 08 and 07 and 08, right? So let's take a look at this one here, all right? 08 and 07, same thing, it went from that inversion, okay? Inversion, it happens, all right? Then you went up, okay, with the huge steepening process. Okay, that went first, right? With the huge steepening process. Okay, in fact, I have to say that initially it also moved up. All right, but we saw that, you know, during the period of 07 August, etc., it went that straight up in terms of that steepening process. Okay, in the first attempt to move away from 0%, that means where, you know, initially the yield curve inverted, and there's the first attempt to move out of the inversion. All right, we had that very steep up, and shortly after, what happened? The market actually crashed. That means that the market, okay, moved up a little bit and then actually moved down from here. Right, we saw this crash happening. Right, now let's take a look at another one more example. Okay, and that would be during this period here. All right, same thing. The yield curve must invert first. Okay, then we will see that steepening process happening, and that was during the 2000 and 2001 period. That was dot-com bubble burst, right? Okay, and dot-com bubble burst is also same thing, where the liquidity dries up. Right, because initially there was a lot of money in the market, but when liquidity dries up drastically, right, then that caused a crash into the tech stocks. Okay, but before that, let's talk about whether the yield curve moved away from the 0. It moved into that territory, right? Moves up, okay, with that vertical straight up type of movement. All right, then followed by another one more round like this. That pretty much also, okay, caused a crash in the market. Okay, right? Then, of course, my data wouldn't be enough, but if you take a look into what happened in the earlier period, it just also show the same thing. All right, so because I have another data source that shows the same thing in terms of the steepening of the curve followed by the crash of the market, especially the stock market. Okay, now same thing. Let's go back inside here, which is the current data. We have not seen, okay, priced for the 10 and the 3 moving towards that 0 yet. Okay, so therefore, this is good news because at least, right, in the near term, then the market probably would still be fine if you look at what happened in the past. Okay, so that's one of the conclusion I want to make. But what really matters, okay, is that what really matters is that the 2-year is showing that steepening process. So this could be a warning sign for us. All right. Okay, so therefore, the last fortress to go is that the 10-year and the 3-month shouldn't have that steepening process and should be gently inching up above the 0 line, 0%. Okay. Okay, with this, I will just take some questions first because that's my conclusion for today. Any questions to ask about this, and then before I proceed to the next session? Therefore, what I'm trying to say is this, is that whether there will be a crisis or not, the bond market, I believe, okay, would be the faster mean to let us know. Okay, so far, the 2-year bond yield is dropping. Okay, and that caused the 10-year and the 2-year yield to show that steepening process. All right, but I believe that the key indication, that means that the one that really tells us a very strong story, is actually the 10 and the 3. Okay, because the 10 and the 3 told us earlier in October, November period that the yield curve had inverted and that caused a boost to the stock market. All right, so that was my argument back then. My argument right now is that the 10 and 3 had not shown that fear yet. Therefore, I do not think, all right, in the meanwhile, we're going to have a crash in the market. Okay, but it is a fact that we are in that yield curve inversion. Okay, it is a fact that from the past, in the past historically, no matter what happened, all right, it will resume back to the normalized situation. It's just a matter of time. When? Okay, when is difficult to answer. Therefore, one should monitor very much into the 10 and the 3, all right, and to look for that steepening process. Okay, that means that to look for this very steep up curve, all right, and then you would be able to be the first to get that leading indications. Okay, at least, okay, a leading indication of 1 to 3 months. All right. Okay. I won't say that if the 10 and 3 will be 0, we expect a crash. Okay, I would think that if the 10 and 3, when it hits up to 0 or when it goes above 0, the movement is vertical. Okay, that means is looking like these. Okay, type of this vertical straight up. Okay, when it's approaching it in a gentle manner, that means a slow and gentle manner, it's fine. But when you have this type of a straight up thing, all right, movement, okay, and that is not fine. Okay, that reflects a lot of fear in the market. Okay, a lot of very extreme movement. We want a gentle movement. We don't want extreme movement. We want slow movement in the bond yield. We don't want extreme movement in the bond yield. Okay, because when you have extreme movement, it means that the bond traders or investors, they are very worried. And who are the bond traders or investors? They are not retail market. They are really the big guys out there. All right. Where to find these chart? What you can do is I'm actually not sure whether this is available for the free version of TradingView. What you can do is you take US 10-year U. Okay, so the code is US 10Y. minus, okay, there's this equation here, right? Minus US 03 MY, which is month. Okay. But when you want to minus off the 2-year, then it's US 02 year, 02Y. So it's US 10Y minus US 03 MY to get this U curve here. Okay. All right. How will this affect the USD? Now, when you have when in the past, right, when there are problems in the world, okay, and even problems in US itself, then the US has been traditionally regarded as a safe haven, okay? Now, including the US dollar, because if you own the US dollar, basically you can use the US dollar to buy a lot of things, all right? If ever there is a crash, then the US dollar would benefit. That's in the past. All right. But if you take a look at what is happening to the central banks right now, they are trying to move away from the US dollar. The China and many of the other countries are trying to, for example, to price their oil in RMB. Okay. And to make a lot of transaction using RMB. What is the effect right now? I do not know. Okay. But if you look at what happened in the past, if there's anything, right, even in the US itself, like a crash or crisis coming, then it will benefit, all right, the US dollar. Okay. So therefore, I think that whatever it is, the US dollar should be heading up if there should be a crash. Okay. But based on what I'm showing you right now, on the bigger picture, all right, I'm not talking about day-to-day trading, but on the bigger picture, the bond market is not showing a crash yet. All right, therefore we have a bit of a stability coming in, and things seems to be as per normal already. All right, but do monitor in terms of the bond yield. That's the message I want to bring across to you today. Okay, all right. Any other questions? Okay, now if no other questions, I will just pause this for a while to move on to the next part of the presentation that I want to do. All right, and where's my stuff? Okay, just give me a minute to show it again. Okay, let me just take one question. Is it okay to have USD as base currency in trading account? I think it really depends, right, on your horizon. Okay. Personally, I still think that the US dollar, as far as what I'm looking at in the next half year, I still think the US dollar is uptrend. Okay, on a broader term. All right. If there should be, let's say, no crash, okay, no crash, huh? I mean, no issue, because we do not know how long this whole rate thing will continue. All right. If there's no issue, then at this moment we are seeing is that if US is going to pause rate, or even to cut a little bit, that should see a weakening in terms of USD. Okay, under the normal situation, for example, Fed pause rate and then eventually cut by a little, then we're going to see people taking profit of the USD. Okay, so that's one scenario. Now, the other scenario is that what if there is a crash? Then I think that is going to benefit USD. Okay, all right. So we have two situations here. For myself, right, I always like to retain for trading, right, I always like to retain in Sing dollar. So that's really my preference. Okay, although I do have investment in US dollar, right? If there's a crash in USD, is USD the safe haven, or gold will be a better choice? Actually, I think gold will be a better choice. Okay, gold traditionally has been a better hedge, right, against a crisis. So I think gold would be a better choice. I'm not sure whether people are queuing up to buy gold though. I haven't been to the jewelry shop, right? But I'm not sure. Anybody interested to buy gold? Okay, now let me just quickly share a little bit because tomorrow is the last day of the Tor course promotion. All right, I'll just explain a little bit of what we are doing here. Um, Therefore, for example, if you guys have been trading with me, with OFM for a while, you know that we have the dashboard that helps us to monitor trade, and then we execute every 4 hours. We basically look at the day and we look at this wash and rinse pattern. All right, and we use automation to help us. Okay, one announcement to make. Very soon we will be offering, not very soon, but it takes some time. We'll be offering the whole system to trade into stock CFDs. Okay, that would be the next development that we are doing. All right, that means that all along, a lot of people think us as trading into FX, trading the indexes. We are finally importing this officially to be using it on the stock CFDs. Okay, all right. Now, so this is our dashboard. This is how it looks like. So this is our like a signal alert. Okay, that comes in. All right, and then the arrow here that you see is the wash and rinse. Okay, so these arrow here, all right, is the wash and rinse signal here. Okay. All right. This is how our chart looks like basically in the lower time frame. Okay, just to quickly round up, to sum up. And I have the review from Rick, all right, because I think that this is very important just to share with you. Today, we've just launched Alum Grid, which is another expert advisor. If you have not, try that, you can just go to our website. If you have the subscription for the Alum Room, all right, then please go and try out Alum Grid. Alum Grid is very fascinating because when there's a good trade running, it will keep on adding the trade for you, such that, I ever had one trade, right, that it kept adding, such that my reward to risk ratio was about 7 times, right, versus one risk. Okay, that means that every $100, I'm $100 or one part of the risk that I can potentially lose, right, it make about 7 times of that. Okay, it works very well in terms of where you have a trending market. Okay, but when it becomes a ranging market, it can quickly cut off, right, your losing trade. So Alum is something that I spend a lot of time to make sure that our trade are properly managed. Okay, so this is something that you want to go and have a look. Okay, Alum Grid, right? So it is not an upgrade of Alum, but it's another product in the Alum series. Okay, that means that we will continue to launch new products. All right, so we have Alum, which works in a different way. We have Alum Grid that works in another way. Then we have new products that's going to be launched. Okay. All right. I won't flash this one here. Same thing. I just wanted to go through our course. All right. Just give me a minute because I thought that I shared a slide, but it's not here. Okay, just give me a while. Okay, can I just share like this? Okay, I think you can see on my screen. All right. Therefore, let's give a summary, right, of our programs right now. Okay, number one is that we have this Tor course. Okay, Tor course, right? Now, Tor, which is the alien washer, is the only course that we have. Okay, the only course. But what I did is that I launched the hand holding program because I realized that while you know about the theory, a lot of times, a lot of people are just not confident in putting in a trade. And especially when they learn a lot, realize that when you apply that live, things get a little bit different. Okay. All right. So we just launched this hand holding program, which I've in slide here, right? I've listed down the cost, the price. Okay. So the total cost itself in Sing dollar is $700. The R program, which is the hand holding program, is $500. All right. So all in all, you can purchase them separately. That means that you can say, okay, I want to take the top course only. I don't need the hand holding. You can take the $700. And the good news is that it's fully refunded. That means, what is the meaning of refunded? You pay the cost fee first, and then we will get a way, right, for you to have that $700 refunded in cash. Okay. This is not a scam. It happened to anyone who claimed for that refund. Okay, and it's fully refunded. Now, the nice thing is that for the R program, which is the hand holding program, that $500 cost fee, right? That $500 fees is also fully refunded as well. Okay, and what I did is I packaged them together and call them top last. That means that it's not, instead of the total cost, I packaged together. All right, and then 700 plus 500 becomes a top last. That's 1,200. Okay, 1,200 is fully refunded to you in terms of cash. Okay, now there's a difference between cashed versus credit. Credit means that you cannot withdraw. Cash means that you can withdraw the money. Okay, all right. So there's a difference in terms of my promotion versus any other people. Now, in the R program, because we emphasize a lot on hand holding and a lot on trading. That means that, because end of the day, right, when you attend a course, you want to trade. We want to make money. Okay. Not only that, right, it's the same thing as driving. Driving, you can have your theory lessons, but having the theory lessons doesn't mean that you know how to drive, right? We all need to go on the road to do practical. So our program is the practical. And I also realized that a lot of people fear losses, meaning that the fear that, what if I make a loss? I dare not do it. Okay. Some people continue to stay in a demo account, and that's not healthy because demo environment is just different from a live environment. Okay. So therefore, we work on having your losses cover. We only cover the loss. That means if you make a loss, your loss of $500 is being covered. All right. Now, all in all, therefore, if you take the top plus, then your value is 1,700. Why do I say that? Because the $1,200 is refunded. Okay, so that's the money inside. And if you ever make a loss, right, the loss is also refunded to you. Okay, so that's where we call the loss being covered. The total value is 1,700. All right. Therefore, in other words, right, rather than you spend a lot of money to pay a course provider, if you ever are interested to get a skill, okay, and to be properly trained, whether you are successful or not, I cannot guarantee, because nobody can guarantee success. Even if you go to the best school, you go to Raffles Institution or you go to Hwa Chong, all right, cannot guarantee that every student, they are successful, isn't it? You go for the best tutors, also no. All right. But at least, it doesn't set you back by a huge amount of money. Okay. All right. Because I personally, student told me I pay 3,000 for this, 5,000 for this, 10,000 for this, 50,000 for this. I already spent a total of 60,000 in courses already. And end of the day, I find that I'm still not confident. So at least that loss is being covered for you. Okay, so let's say, for example, after 1 year, I'm totally not interested in investing or trading. All right, but I just hope that you get that knowledge with you, and at least you have that losses covered, or you have the cost fully refunded. Okay, so that's what I think. All right, okay. A few questions. Is it applicable for existing members who already has XC account? The answer is yes, but your XC account needs to come from us. All right. If it's not from us, you don't qualify that. Okay. But if you have existing account and then it's not from us, doesn't matter. You can just apply a new one using our link. Now, why is that so? Because we, oh, hey, look, there's no free lunch. I know there's no free lunch. Your lunch came from me. Okay, because why? For example, you know that there are brokers who say you sign for this, and I give you one Apple share. I give you one Tesla share. People never ask, right? Where did the Apple and Tesla share come from? Okay, same thing. How can I give you that 1,200? It came from the marketing money. Okay, that a company needs to spend, and instead of spending it on Google, on YouTube, all right, it's spent on this, and I ask them to pay you back instead of paying to me. Okay, I should get the money, but no, I pass it to you. Okay, all right. So let's talk about what does the R cost shows. What is the R cost? Okay, let's talk about the TOR cost. All right. The TOR course has module 1 and 2. The module 1 is free. All right, it talks about wash and rinse. All right, but module 2, you have to take it. Okay, without module 2, right, you will not be able to trade our method, or neither will you understand our method. All right, nobody is going to give you a free course and give you everything. There's no such things as free. Okay, come on, that's is probably something, and you're missing something. All right. So therefore, if you want to take the TOR course, and the TOR cost, the $700, right? Promotion is expiring tomorrow. Okay. Let me say, if you don't want to take the TOR plus, you want to take TOR course only $700, it's expiring tomorrow. Okay. But if you want to take the 1,002, which is TOR plus, then it expires 1 month later, because we got this new due. Okay. So the other due expired. All right. So what's included in this module 2, which is the TOR, the $700 cost, right? I think most important is the use of our indicators and our automations, because if you know from us, we don't we every single lines, everything are all automatically plotted, and that's my style. Okay, because I don't like ambiguity. All right, I want it to be consistent. Everything has to be there, nicely drawn. All right, so the alert comes in, you receive the alert, you trade that. All right, of course, then there is a need to apply a little bit of a analysis, okay, because there's no such things as you can totally not do anything and then you can make the money. All right, and of course we have this twice weekly webinars, which I think it's something that a lot of students welcome, that they keep on attending the webinars. Okay, and then you have the support group and have the trade ideas. All right, all this would be under the alien room, because the TOR cost, the $700, include the course itself, attending the course, which is online course, plus this 12-month subscription of the alien room. The alien room is like our support. A lot of people ask me, what is the alien room? Think about as the Apple Care, as Apple Care. Okay, so think about the alien room as like the alien care. That's our care for you for 12 months. All right, essentially to get support from us and to get the use of our indicators. Okay, let me just answer a question later on. Right, I just present this one. Therefore, the key thing is just go to this website here. It's easy, bit.ly/tor2266. 2 is my lucky number. 6 is also my lucky number. No lah, just happened to be 2266 only. I also don't know why. Okay, just go to TOR2266. The promotion for the TOR cost of $700 ends tomorrow. All right, don't miss it if you are only going for the $700. And the promotion for the TOR Plus, which is the 1,200, that includes the hand-holding program, ends 30th of April. Okay, now I know that it is not a scam, but I just wanted to talk about this, where Alan talked about, right? The $700 is fully refunded through a very innovative program, okay, that Beanie has set up with a reputable brokerage. Axie is very well known in the world. Okay, it has an office in Singapore, very well known in the world. It's regulated in Australia and in UK as well, and in New Zealand. All right. The thing is, right, for all reputed brokers or any brokers out there, okay, nobody knows whether they will fail. Okay, because I remember that there was this broker about 10, 12, maybe 15 years ago, Man Financial. at Demand Financial, yeah, they also went bust. All right. I always say one thing: don't put too much money in it, and then always withdraw your profit. That's always something that I will always do. Okay. So far, what is key is whether we are able to withdraw money from it, and I have no problem withdrawing money every month. Okay, sometimes I don't withdraw because sometimes when this particular month the profit is not a lot, I just keep it there and I withdraw the next month. Okay, but so far for the past 10 years I have not a single time internet review and say, oh yeah, some people had problem withdrawing, because you have to understand, when it's brokerage, it's very strict. Okay. The money that the account that you funded with, the bank account that you fund with, all right, when you withdraw the money, it must be back into the bank account that you funded with. Okay, so that's to prevent money laundering. Okay, therefore I always use the same bank account. I don't have any issue with withdrawing money. Okay, so that's the key thing. All right. Okay. Before I answer the question, this one here, right? If I attend any of our course, it comes with this 12 months the alien room, basically the right to use our support and our indicators and our robots, right? What happens after 12 months? Or 12 months later, you have to renew, okay? And you have to pay that 12 months fees again, all right? So this is the only one that I'm charging recurring, all right? But you have the option not to renew, okay? And you still attend my webinars, all right? So that's 576 Sing dollar a year. Must I pay for the course fee first? Yes, you have to. Is it suitable for newbies? I think that with the R program, it's even more suitable for the newbie, right? So let's talk about what is inside the R program. Okay, so let me just flash this one here, right? Now, in the R program, it's basically there is a course that you can do it all over again. That means there's a course, right? That you can watch. Is a video course. But the key thing is that me and another trainer, Pauline, all right, we are always there, all right, to guide you in terms of trades. Okay. We know that a lot of people have problem putting in trades. And even to put in trades, right, you have problem about holding the trades. So yesterday, when I was doing the session with them, we call the access time. That means that every day we allocate a time where me or Pauline will be there to talk to them and for them to assess us. Assess means ACCESS to come to us, right? Like we are the tutors, and then they ask us basically questions. Okay. And the difference is that in this one, they are able to ask questions, not type, but really speak up. Okay? Because I find that it makes a lot of difference if they can be able to speak. All right. So we make a bit of a changes here. So they ask us questions like, should I hold on this trade? How do you handle this problem? Or that yesterday we were looking at Euro Kiwi and there was a trade, right? And what I say is, okay, now come on, let's put in the trade. Okay, why? Because then your losses are covered, right? If you just put in demo also can, you just put in the lowest amount also can, just put in the trade, and then we talk about where to take the profit. And this morning, all right, at I think 9 o'clock or 9:30, all right, that profit was taken and we were out of the trade already. Okay. Some students make about 40 pips, some make about 60 pips. Okay, because our aim for them is a certain pips to hit, right? And I also like them to document it, okay, to share their process so that it became ingrained. All right. Now, one of the objectives that I've stated for the group, for the R program, is that to not come to us to correct your mistake. All right. Instead, we want to make sure you do it the right way first so that there is no mistake. So that's the difference. We are very strict, right, in asking of, at least for myself, very strict in asking for you what to do. For example, in a Euro Kiwi trade, you put in a trade and that is the good trade. You put it in, all right, why you put it in, and then you take it, okay, you take the profit at the point that I say. Okay, so this is the whole R program, meaning that really to handle, all right, if you need to trade, you trade. If you don't need to trade, you don't trade. Okay, so hope that after 1 year, you become a very good, profitable trader, and hopefully to benefit you for life. Now, if after 1 year, right, you fail, at least your course fee fully refunded, and hopefully your losses also fully covered. Okay, so this is the key thing about our program. Okay, all right. Basically, it's all about trading together. Okay, how do we pay for the 1.2K for 1.7 including loss cover? How do we pay? Okay, very good question. You just go to this website here. Okay, when you go to this website, let me just show my screen. Okay, now you will get inside my web page. Okay, and in my web page, basically you scroll down. All right, it will tell you exactly what it is, and then when you get top large, you just press sign up. Okay, and you can make the payment via credit card. PayPal has credit card, just pay. Okay, now you don't get $1,700 in cash. You don't. You only get $1,200 in cash in your broker account. Okay, which you can withdraw. All right. Okay. The remaining $500 is on condition that you make a loss. So if you don't make a loss, that's wonderful news, right? They will not cover your loss. If you make a loss, then that loss of maximum $500 will be covered. So in other words, right, in trading, people will make losses, right? Okay. And you happen to make a loss, at least you know that you are covered while you are perfecting your skill. So that's the whole idea here. Okay, and this is the reason why I personally encourage you guys to take that top plus if you are new to us. Okay, or if you have friends who wants to take it, then to take the top plus. A lot of people say, hey, look, Beanie, you don't cover the stocks. Not true. I cover stocks, just that I don't specifically market it or cover the stocks. Okay, like for example, last year in November, and I highlighted the yield curve inversion, and I basically said that this is a good time for the stocks. Of course, I don't say it bluntly to say this is a good time, but I spent many lessons talking about stocks at that point of time because to me that's a good time. All right, to pick a bottom. Okay, so this is when I will cover the stocks. All right. Of course, if you ask me about stocks, then I'll cover. If you attend, for example, my SGX session, I will cover the stocks as well. Like for example, I covered in my previous session in March, I covered Anta at $100. Or is it 101? $100, yes. And it went up to 112. I covered Alibaba, okay, to buy at $81. Okay, $81. What happened to Alibaba last night? It went up by 13%, 14% plus, 14% from $81. Okay, because I talk about $81 and it hover there. All right. Now, where did I get all these levels? Actually, exactly from how I teach in Tor. Okay. It's just that when I do my other sessions, either I don't have time to talk about how I get it, that levels, how I come to the conclusion, or I just simply don't have the time to talk about it. Okay. But they are not a secret to my students. All right. So if you attended Tor and then you hear me talk about stocks in other session, you will laugh, ha ha ha. Oh, this is how she get it. So this is how she choose. All right. So this is how, because all of those will be mentioned, will be taught inside my own main program. All right. Do I have to sign for XE before promo over once I sign up for the $700 course? It makes sense do it as fast as possible because there's an expiry date. Because when you pay for the course, right? Okay, you need to fulfill the volume. That means you need to meet the requirement, which include one of them. That means meeting the volume requirement. It's very easy. Okay, and this time round is even easier because when you fulfill the volume, all right, your losses, when you fulfill the volume, right, your losses while you're doing it, it's also covered. That's the nice thing. The previous round don't have losses covered, so they have to pay a little bit of money to get that $700. Okay, but this time around your losses all covered, right? So therefore, it is good to let's say, for example, you pay for the course, right? It is good to meet the volume quickly, and we have a method for you to meet that volume within minutes to do that. For example, I have students who wrote in the session earlier. I don't know who wrote that. Basically, they funded yesterday. They enrolled in the course yesterday, or is it the day before? And then they funded, And then they wrote the email to Xe at night. And this morning, they received the $500 cash in their account. Okay, I don't know, right? So when you scroll down to the course FAQ here, all right, click on how to qualify. There's this video that you can watch on how to meet that volume very quickly. Okay, and the volume must be met within 3 months from the last day of promotion. So, for example, all right, you are taking the tour only $700, right? The last day of promotion is 31st of March. You have 3 months from 31st of March. That means 31st of June, you must meet that volume. But we have a method for you to meet that in just 3 minutes. Okay. For example, if you take the top blast, right? The last day of promotion is 30th of April. Therefore, you have to meet the volume requirement by 30th of July. Okay, but doesn't matter. We have a method, 3 minutes to meet that. Okay. Yes, you can use your old Xe account that's open under Terras. It's no problem. Okay, as long as it comes from Terras, because we are paying for some of it. All right, and so you don't need to sign up immediately for Xe, but it makes sense for you to do it because at least you have the price feed. Okay, but you can sign up. You don't need to fund first. There's a difference. Sign up first, get the price feed, explore the platform, and then when you're comfortable, you fund. Okay, but you need to fund in order to receive the cost refund. So this is the requirement also. It's our top plus also for expired tour members. Well, for expired tour members who had received the $700 before, it doesn't make sense to get the top last because the $700 will only be refunded once to you, okay, per account holder. Okay, that means you have already been refunded the $700. Even if you do the top last, all right, then you will not be refunded the $700. You only be refunded $500 only. All right, so therefore it doesn't make sense to do top last. Although I will probably receive more money. Okay, but it's not worth it. I have attended tour course funded by Xe. Can I still join Tour Plus and get a course fee? Okay, I answered this one already. No. Okay. If I sign up for Tour Plus, there will be refund for $700 and $500. Well, if you never had that $700 refunded before, then the answer is yes. If you had that $700 refunded before already, then no. Okay, because you only qualify for the $500. Right? What is the minimum to fund account to qualify the refund? Okay, it's all listed here. Okay, it's all listed here under the summary. Here. Summary of the volume and funding requirement. Okay, all right. For top blast, it's $5,000. Okay. All right, and then top blast and R program only available to Xe account. Okay. All right, if you have the Tor module 2, which is a $700 cost, you can get it from either Xe or Blueberry. Okay. All right, but Tor Plus and R only from Xe. Okay. All right. And that's all from me. Let me know whether you do have any other questions because I believe that we have answered almost all the questions in the course FAQ. All right. And all of them should be there. Okay. The whole idea is if you should get into trading, you don't want one course to set you back with the cost fee. All right. I mean, I won't say that mine is not good. Mine is actually very good. All right. But at the same time, it doesn't set you back with that cost fee, isn't it? Okay. So that's the best thing. Okay. I finish your module 1. Okay. And then have not paid for module 2, nor have I funded the Xe account. Yes, if this is the case, you should go for Tor Plus because you have not funded, you have not paid for my course. Okay, then the best thing is to go for Tor Plus. All right. Therefore, I think should go for top loss. Can I go for top loss? Yes. Promo ends 30th of April. Don't wait until 30th of April. Why? Because if you're really serious about it, you do it quickly. Why is that so? Then you can be quicker to make money, ma. Okay. All right. The funded amount can be withdrawn anytime or need to satisfy specific trade volume. Yeah, you need to meet this trade volume here. Okay, for top loss, it's 2 standard lots in Forex of equivalent. Okay, so this volume has to be met before the money can be withdrawn. I just want to say this, right? Probably you won't get this deal elsewhere. Okay, I'm quite confident about this one because in order to get that 1,002 in cash plus the $500 loss cover, I have to agree to XE on something that I never agreed to anybody, any broker that I work with. All right. Therefore, in order for them to offer me this deal, to offer you this deal, I have to agree to something. Therefore, I don't think that you can get it elsewhere. Okay, at least in Singapore. Yes. Okay, I don't think you can get elsewhere. Therefore, please don't abuse it. Okay, I mean the last thing is that we don't forbid you to withdraw money. That means that this is your own money. All right. In the terms and condition, there is no such things as I forbid you to withdraw your own money back. Okay, but the last thing we want, right, is that you fund, let's say, $2,000. Okay, the broker give you $700, and after that, what you do? You quickly withdraw $2,700 and say bye-bye. That's the last thing that we want. Okay. And so far, I'm able to keep the promotion going for so long because my students have been really wonderful. They have been trading, being very nice to the brokers, and they continue to pay for it. Okay. No, I mean, if you look at a business, right, no business would want to continue to pay for something if it's not worth it for them. All right. Therefore, you can withdraw the money, no problem, but let's not abuse it. Okay. What is renewal cost, which is the 12 months cost, right? It's 576 Sing dollar. Haven't increased for a few years already. So it's valid until now, Not sure whether it will increase or not. The student asked me not to increase. Okay. Top last trade ideas is Forex related. Not really though. We do Forex, we do indexes. Like today, I just posed up for Hang Seng, all right, an idea, and I'm monitoring that idea. Okay, so that's for Hang Seng. I wouldn't say it's all Forex related. All right, okay. So, yeah. Okay, that's good. No other questions. I would just see you again the next streaming session. Okay, the next streaming session, all right, I'll be talking about gold. Okay, let me just see that. There's another one more question here. For the R program, the loss is based on total loss of all the trades made? Yes, total loss. Or is it the overall profit and loss at the end of the 3 months? If ended with losses, then got insurance of $500. Okay, is number 2. If you have a profit and loss at the end of 3 months, net off, you still make a loss, then you have the insurance of $500. Let's put it this way. Let's say, for example, at the start, you have $3,000, all right? And after the loss cover period, which is 90 days, you end up with 3,500. You don't make a loss. You actually make a profit. Will there be a loss cover? No. All right? Let's say, for example, you start with 3,000. At the end of 90 days, net off your wins and your losses, you net with $200 loss. That means your account from 3,000 became 2,008. Then they will cover your loss of $200. That means they will put the $200 back so that your account become $300. Okay. Now let's say, for example, starting from 3,000, all right, at the end of the loss cover, your account end up with 2,000, that means you make a loss of 1,000, right? Then how much will XC put back? $500. That means that your account, instead of 2,000, will be 2,005. Okay, they will cover $500 maximum loss. All right, so this is what it means by loss cover. Okay. Okay. Let's take a look at this one here. Jason. Jason is really great for to me. All right, so let's what Jason. Cost fee is reasonable, excellent support, and do join the community. You will not regret the decision. Yes, I think so. You will not regret the decision. I'll be very frank with you, okay? Whether a lot of people say, I can assure you that you are profitable. But, through so many years of training, I don't think that we will do our best to help you. Okay, like doctor, we do our best to help you, but nobody can guarantee that it will be really, really 100% successful. Okay, all right. That's the fact. That's the truth. Okay. You have to fund $5,000 in SGD. Yes, you have to top up $5,000. If you have a real account, you have to fund. You have to fund. Yes, your money belongs to you. Okay, that money still belongs to you. Is your trading capital. All right. What is the charting program used by Tor? We are using MetaTrader. Okay, we are using mainly MetaTrader 4 and MetaTrader 5. You took the Tor course with Blueberry last year. If I take the Tor Plus with XC and fund 1,002, when do I need to renew for the sickness? You actually do not need to renew for the sickness, because the Tor Plus comes with 12 months the alien room. All right, because basically the Tor Plus, right, is Tor course, which comes with 12 months the alien room. All right, plus R. Okay, so therefore the Tor Plus is a so much better deal. Okay, because then you do not renew for the alien room anymore, because you still have another 12 more months of alien room. All right, it's a good deal. You mentioned for those of us who are already tall, how do you add R if you want to do that? Okay, very good question. You have to go up to your account here, all right, and then purchase the Aiden Room or the R program. Okay, so that's one way to do that. Or you go to the price panel, that means the price tab here, right? Once you go to the price tab, then you scroll down. Okay, you scroll down, you find that you can sign up for the R here under the price tab here. You mentioned that it's going to be available for stock CFD soon. If yes, will it be a separate paid cost or using the existing strategy? Using the existing strategy. All right. I've so far not changed anything, but there would be additional indicators and robots being launched for this one to support it. You have to understand my style. All right. Whatever that I'm doing, whether it's for stocks, for futures, or for Forex or indexes, we are using the same method, which is Tor. Okay. Even if I'm analyzing stocks for my students, okay, we're using the same method. It's just that different instruments requires different type of support. So, for example, the indicators might just be changed a little bit to have different integration. For example, one of the key thing, right, that is important for stocks is this indication which shows the year high and the year low. Okay, and that will be incorporated inside. All right, but don't expect it to be too soon. Okay, because all my students know that whatever they develop has to be fully tested, not because of the methodology, but because of the function, the functions, right, of each of that indicators. And I'm also involved in another 2 more projects for overseas. Therefore, it gets a little bit more busier, but that will be definitely the next move to go. Okay. Okay. in this case, should we be still download MetaTrader 4 for now? Okay, still download MetaTrader 4. 1,200 will become part of the capital if I satisfy trade volume. Yes, but you can withdraw that 1,000 too. You can withdraw any money because these are essentially cash. All right, okay. It is a little bit different. These are cash, not credit. Okay, so there's a difference here. All right, that's why I say this promotion is something that you should not wait anymore. Okay, so end of the day, the Tor promotion, Tor cost $700 promotion will end tomorrow. Okay, so if you still want to get the $700 promotion, all right, then you should sign up by tomorrow. Okay, it's actually 31st of March, but tomorrow to me, I want to be very careful because some people say I missed the deadline, can you please extend? But it's not up to us, it's the broker. Okay, but if you want to take the top loss, it's still 1 more month, but don't wait too long. All right, I'm just going to end the session. Must we pay for MetaTrader 5? No, don't need. It's free of charge. Okay, you don't need to pay for that. When is the next promotion for Top Plus? Don't know. Wait long. Is the newly launched alone part of the TR subscription? Yes. So far, for any new things, new indicator, new things, new robots that I've launched or I'm launching, I make the commitment, all right, that it will be in part of the alien room. Okay, that means that I won't be charging extra stuff as long as it's within this framework here. Okay, and so far I've kept that promise. I have not charged extra. All right, but I also told my assisting student, right? It's hard for me to hold the prices for long because of whatever that's happening right now with inflation. Even I have to increase the fees, right? I mean the salary for my staff and everything all have to increase, right? So it's very difficult for me to hold that low price for long. Okay, so that's something I want to share. If you want to do the R program, we need to renew the TOR strategy. I think you are referring to whether you need to renew the alien room. Okay, here, right? Where you get the indicators and use. I would say yes, because we're all using that, right? Without the indicators, without all this, you won't get the signals, all this stuff. But even if you don't want, I can't force you. Okay, all right. Because these are the tools, isn't it? Okay, whatever that's in Tor in the alien room, that's your tools. All right. Yes, it's part of Tor Plus. Okay, that means TAR, the one that you're seeing here, TAR is part of Tor Plus. You see that? Okay. In Tor strategy, $700 is the strategy plus 12 months of the alien room. Okay. Now in Tor Plus is everything in the previous one, which is everything in the Tor strategy module 2 plus 12 months of handholding. All right. So Tor Plus is everything all inclusive. All right. Okay. So good to just take it now if you can. Okay. Don't wait during the last moment. All right. Okay. I will end the session and it's very nice to talk to you guys. All right. Look out for the next streaming session where I'm going to talk about gold. Okay. Is a topic that personally I'm interested. All right. Gold in terms of the movement of gold. I talked about it earlier. All right. And then I also want to talk about gold in terms of where to buy gold. Okay. Very important. If you want to buy gold, where to buy gold. Okay. I've not bought gold recently, but I've bought quite a fair bit of gold. 2013. Okay. You track the price at 2013 and you know roughly what price I bought. Okay. Thanks a lot. I see you again next week. Bye-bye.